Welcome to AITV News. Today, we're examining how certain Republican tax proposals could potentially lead to significant reductions in Medicare funding. Some estimates suggest as much as $500 billion over a decade. This prospect has led critics to describe the potential impact as cruel. The core issue lies in the federal deficit. Large tax cuts, if not balanced by other budgetary adjustments, tend to increase the deficit. Under federal law, a rising deficit can trigger automatic spending cuts to various programs, including Medicare, which is a vital health insurance program for millions of Americans. This process is governed by the Pay-As-You-Go Act of 2010, commonly known as PAYGO. The PAYGO rules stipulate that new legislation affecting government revenue or mandatory spending should not increase the national debt. If a new law, like a significant tax cut, is projected to add to the deficit, PAYGO can mandate automatic, across-the-board spending reductions to offset this increase. Medicare is among the programs subject to these automatic cuts, although these reductions are typically capped, for instance at 4% per year for Medicare. Similar concerns arose with the 2017 Tax Cuts and Jobs Act. At that time, the Congressional Budget Office, or CBO, projected that this law would substantially increase the deficit. This raised alarms that Medicare could face considerable cuts due to PAYGO. For example, the CBO indicated a potential $25 billion cut to Medicare in 2018 alone if PAYGO requirements were not waived. However, it's important to note that Congress has often intervened to prevent these automatic cuts from taking effect, and they did so following the 2017 tax law by passing separate legislation to waive the PAYGO requirements. This issue is gaining renewed attention because many individual tax provisions from the 2017 Act are scheduled to expire at the end of 2025. Discussions are underway, particularly among Republicans, about making these tax cuts permanent or introducing new ones. If such proposed tax changes are not designed to be deficit neutral, they could once again trigger the PAYGO mechanism and potential Medicare cuts. The $500 billion figure often mentioned is a projection of the possible 10-year impact on Medicare if significant, unpaid-for tax cuts were enacted. Furthermore, some current Republican budget blueprints propose substantial reductions in overall federal spending, which critics worry could also affect Medicare, either directly or indirectly. There are strong disagreements on this matter. Critics argue that pursuing large tax cuts, which they contend often disproportionately benefit corporations and wealthier individuals, while risking funding for essential programs like Medicare, represents an unfair prioritization of resources. They express concern about the potential impact on seniors and access to health care. Conversely, proponents of tax cuts often argue that such measures stimulate economic growth, which could, in turn, increase government revenue. They might also suggest that entitlement programs like Medicare need separate reforms to ensure long-term fiscal sustainability. Or they may believe that Congress would and should act again to prevent any PAYGO-related cuts to Medicare. If PAYGO-mandated cuts to Medicare were to be implemented, they would primarily translate into reduced payments to healthcare providers and Medicare health plans. While Medicare beneficiaries are generally shielded from direct cost increases, such as higher premiums or deductibles, specifically as a result of these PAYGO sequestrations, sustained lower payments to providers could, over time, potentially affect their willingness to accept Medicare patients or invest in new services, which might indirectly impact access to care or the quality of services available. In summary, the ongoing debate about potential Medicare cuts linked to tax legislation highlights the complex challenge of balancing tax policy, federal spending priorities, and the sustainable funding of vital social programs. Whether such cuts materialize often hinges on future congressional actions to manage the deficit or to specifically override automatic enforcement mechanisms like pay-go.